A very warm welcome to each and every investor gathered here for today's event. Marketsmojo, the fastest growing investor community, is geared up for tomorrow with some big upcoming plans and launches. We have with us our CEO and founder, Dr. Mohit Batra, who will provide you a sneak peek and insights on what new plans are in the line. And most importantly, how are we going to ensure our IP and advice runs seamlessly today? You could drop in your questions or any queries you have in the chat box or the Q&A section. Over to you, Mr. Mohit.
A very good evening to all of you. Wish you all a very happy Ganesh Chaturthi. Not just to all my Hindu friends out here, but all my Christian, Muslim, and from various other religions who are bound here. We are a one religion company, so it is not that we celebrate just Ganesh Chaturthi. We celebrate every possible festival that comes in. the the main thing that happens, and I don't know if you guys know some things about me personally. I'm a Hindu, but I'm married to a Muslim girl, and my partner is a Christian. So we have diversity in every part of what we do personally as well as professionally. I have two sons, which are twin boys, Rajveer and Rohan. They are just turning 18 very shortly. And we worship every single festival with the same jest because I think, we believe in the oneness of God. We've always believed in that. So there is a lot of blessings that today I would pay gratitude to all of you that you have showered on us. We at Marketsmojo today have become the largest financial advisory community in India. We have close to 10 lakh subscribers. A lot of you, users keep asking us how many people are there on Marketsmojo. We are over 10 lakh registered members in Marketsmojo today. We service each and every member with the same jest, with the same principles that we would service the richest person in this country, and that is our foundation. Uh, we are both me and Joyson come from very humble backgrounds. I am a son of a teacher and an engineer. Joyson's parents, his father was in railways. So we come from very humble backgrounds. And right from the first day of our professional career, and this is something that I can tell you with full confidence, is that our focus has been our investors in whatever profiles that we'd done. So when we launched Money Control way back in 98, we wanted to get a concept of personal finance in India at that time, inculcate a habit of saving in users. uh, we over a period of time doing various things, right from insurance company to a wealth management company to running a broking company to running a portfolio management service company, and then finally Markets Mojo. There was one principle basis which both me and Joyson got back together, and that was the investor returns in this particular industry. I have had the opportunity of working with extremely wealthy investors, which is my good fortune. But having said that, this is the first time that I'm working with large number of retail investors like yourself and myself. We don't understand the difference in between retail investors and HNI investors. The reason we don't understand is because 10 lakh for somebody is equally important than 10 crore for somebody else. It is your personal money. And hence, as custodial of that money, whatever that money that you park with Markets Mojo's advice, our seriousness to each and every investor has always been paramount. Whether you invest 10 lakhs, 1 lakh with us, 1 crore or 10 crore with us, the investor seriousness is the same because everybody is trying to create wealth for themselves in whatever capacity. There's no definition of personal wealth. Personal wealth is very dependent on what your personal aspirations are and what your personal goals are. And that is the reason for us, every customer is the same. Now, I would like to graciously thank each and every one of you for being a part of our journey for the last 6 years almost now, and making us successful, because the hard work that the team has put in, the whole of Marketsmojo team, the full leadership team, and each and every person within Marketsmojo, this hard work is only rewarded uh, by the appreciation that we get from you, or by the satisfaction that we get from you, and also by a lot of suggestions that you guys have posted over the last years of being with us, some of which we've implemented, some of which we are in the process of implementing, and some of which we will surely implement over a period of time. Now, today's session is not a stock session. It's not a financial planning session. It's just about trying to tell you the vision that Marketsmojo has created, and what we are doing today, and what we may do moving forward, so that you guys are aligned with our vision. I can tell you that I have ran at least 5 companies in capacity of a CEO before. But nowhere I've had this kind of a discussion with my investors, where we come very clean and straightforward in terms of what our capabilities are and what we are planning to do. The involvement with which we talk to you through these webinars is not just to try and educate you, but also to involve you in our journey. Because a lot of you guys tomorrow, will have the opportunity of becoming big with us. You will have the opportunity of becoming with us. We'll have the opportunity of becoming with you, and because of you. So that is the reason it's very important for our investors to know what Marketsmojo's plans are, what we have achieved over the last 6 years since we started, and what we are doing today, and what we are planning to do in the next maybe 4 or 5 years. So just to go back around 6 years, when we started the Marketsmojo journey, our plan was not to start Marketsmojo at all. You'll be shocked to know this, that our plan was not to start Marketsmojo at all. I was in a job. I used to run a PMS house by the name of Alchemy. I was their group CEO there. And when I quit from that firm, I had a longish notice period. It was around 6 months. But by that time, Joyson and the leadership team had already come in place, and we had taken up an office in BKC. We had a plan of launching the country's largest financial planning / wealth management website. Our plan was not to start a stocks website. You will all be very surprised with this whole thing, but that's how we wanted to start. Now, with God's grace, I am somebody who's quite known in the financial planning industry. And, when the team came together, I gave them a plan on how to start working on the whole financial planning module. But having said that, I could only come and work after 6:37 in the evening, because I was still on a 6 months notice period. So we started working on that. And then one fine day, Joy said, Mohit, this is not working out, because you need to be here full time. This working in the evenings is, taxing us, and we need to look for a solution. And I said that, listen, I have a commitment of 6 months. I have to give my notice and remain there for 6 months. So we said that, okay, then why don't we make a simple stock analysis module, right? Where, because we had both come with money control experience, where we will analyze basic analysis of stocks. And we will use this particular module somewhere in the wealth management and the financial planning side. And we started working on that. Obviously, this is where Sunil came in, and Joyson was, an expert in this area as well. So we started working on that, and I used to keep going in the evenings. So when we looked at that plan, we named it as Marketsmojo. We said that we will do it and finish it off in 3 to 4 months' time. And then we'll get back to our wealth management and financial planning plan, which was the bigger plan. That 6 months has become 6 years. We are, as you know, known to be Marketsmojo. We don't do anything on financial planning or on wealth management so far. But the journey was very interesting, because when we started putting up numbers on the board and we started drawing out a plan, we said, okay, because we didn't know where to end. Today, you guys see the score, you guys see the model portfolio, you guys see various other things, but we had no clue where we're going to end with a basic stock analysis site as we started. We started the site, and Sunil was obviously, very keen on doing analysis through the system, and we were doing analysis, and there was this whole data, and next to data, what does the data mean? So if the PAT growth rate is so much, what can it mean? So on and so forth. So that was the first construct when it came. I had two words that I used to write on the board always. And these two words, I will tell you, which made us reach here. These are the most successful two words that we used in Marketsmojo's early journey. I used to write, whenever they used to tell me that this is today's work, I used to write on the board, so what? And I used to put a question mark. So they used to say that, Mohit, this is the analysis. I said, so what? Isse kya karunga? What will I do with this? Right? They said, you get a lot of intelligence looking at this data. I said, my customers don't understand this. Are you trying to educate people? You're trying to make them make money. So when this whole so what got deeper, it took us, I think, a couple of weeks to get into a room and say that is sub analysis ka, all these data points that we're collecting, what is the result of this? So there was, and I told the guys that, you guys, there is, unless you can give an answer to an investor by only one question that he would ask you, is that I have 5 lakh rupees today, where should I invest? Right? If you don't have an answer to that, you don't have a product. If you don't have an answer to that, we will never have a product. And if that 5 lakh is not becoming 10 lakhs, 15 lakhs, 20 lakhs, we don't have a product. So this was the two simple problems that we were putting on the board, that the client is not looking for your intelligence. The client is looking for a result. The client is going to come to you to ask your advice because the client thinks that you're an expert, and you have to, at certain point in time, give him a straight answer rather than go roundabout and try and give a hypothetical answer and say that, all of this data is here, now you analyze. And we told each other that there is a day that we want to reach where we want to tell the client that you leave your problems to me and follow my advice. This was something that was a dream, because in none of my previous assignments or Joyson's or Sunil's previous assignment, we could garner that confidence in the product where we could come and say that just follow my advice. We were all doing our jobs, right? So just follow my advice. I know what I'm talking. I know what I'm saying. You have to only follow the advice. Very difficult statement to give for any manager, for any advisor, for any CEO, founder, to say that, trust me, I'm here, we are here, just follow the advice, right? Don't look at 1, 2, 3 months, follow the advice, and you will not, beyond a point in time, you will be only happy that you listen to us for a long period. So it took us 1 year close to come out with the dots, because, they gave me analysis. I said, iska kya karu? So what? So then finally we reached to analysis point and said that, okay, this company in the long run. I said, what is long run? Let's name it. So we named it as quality. I said, but long run simulations, how do they work? So let's look at long run. And, long run simulations were not working fine. So that is the reason, if you see, we keep talking about why buy and hold strategy over a period of time may not work in the best result. So we said, why don't we look at short-term fundamentals? We also look at short-term results. So we started rating short-term results. That dot came as current financial trend. Then we said that this is pure fundamental, but we don't have a target price in the product. We don't have an entry price in the product. How do we address that in a systematic way? Because as a firm, we never believed in any entry price and a target price kind of a thing. It's a very technical, personal driven thing. For me, my target price can be a 10% up or 20% up. That's where I want to book my profits. For you, it may be 50% up. For somebody else, it may be 100% up. The phenomena of continuous advisory has not been there across the world. Everybody follows targets. And coming from my education background, I'm an MBA finance gold medalist. I'm a CFA and PhD in economics. I knew that this whole concept of target price is nothing but a projected price to earnings. where you look at projected earnings and then you say this is the price that the stock can command over a period of time. And hence you say that 100 rupees stock, the target price is 130, 183 rupees, which is something as soon as the earnings change, or maybe the price graph changes, or the PE changes, or the PE growth of the company changes, some other relevant factor changes, your target price becomes, haywire, and it keeps moving up and down. Target price for us was not a target price because it never stayed at that target over a period of time. So we said that how do we resolve this problem of entry and exit? And that is the reason we came out with the whole concept of valuations, and we came out with the whole concept of technicals. For longest, till around 3 years time, we used to have these four dots. We used to just have these four dots, and a lot of customers came to us and they said, we are getting confused because some dot is green, some dot is yellow, some dot is red. So, we are not getting what you're trying to say because, I'm not getting a firm opinion about the whole stock. We again, after 3 years, got into a room, and I remember writing again, so what? These four dots, right, need to have a meaning in terms of a score, which was a very tough convincing internally that we had to do in between our teams, because it was now getting onto the throat. Why it was getting onto the throat is because when you come out with a strong buy or a buy or a sell, you're actually taking a call on that stock. You're not basically giving data points or analysis points to the investors and saying that you guys decide yourself. When we first simulated the score, our success rates were closer to 60%, which means that we were tracking all 4,000 stocks, but we were going right only on 60% of the stocks. There was a lot of tweaking that we got into. I think it lasted for 3 to 6 months. We got into the IP, and we said that what do we need to do to make sure our success rate goes up? By the way, even at 60%, we were better than the market by around 50%, because the market averages on success rates on calls is closer to 40, 44%. And we were at 60%. So we could have stopped there, but we said that this is not acceptable. And I remember Sunil and the product team once coming and saying, how much is acceptable? And I said, nothing less than 80% is acceptable, which is double the market. We have to be 2 times better than the market to be acceptable. And then we'll be able to create alpha for our customers, both in good and bad times. And looking at all of that, then finally, we created a score, we tested it out, and we came out with self-learning scores. Now, what is self-learning scores? Is that when the parameters of a company changes, the score self-learns itself and auto-generates the weightages across various parameters. If I were to tell you, this concept of self-learning of scores is the biggest IP that Marketsmojo has, because it real-time adjusts itself to the market scenarios, not at a market level, but at a stock level, right? So when we created that, we reached to around 80 odd percent. This was around a year and a half back. That's where we said that, okay, now let's take a little rest and let's try and see how we can make this subsequently better. And once we started working on that, that's the journey that we started towards not just looking at India, but also looking at 20 other markets and trying to learn from other markets as well as the Indian markets of how we can make this better. There is a lot of growth that we saw. Our first deal was Bloomberg. Bloomberg, the retail channel, came to us for data, and we supplied them with the data. Then we had both the exchanges, which is Bombay Stock Exchange as well as the National Stock Exchange, taking a lot of fundamental analysis data from us. And we have, close to 30% of the market share today in the institutional space. A lot of brokers take fundamental research data from us, although none of the brokers get the scores from us. None of the brokers get anything that is available on Marketsmojo Professional. There are 2 or 3 brokers who we have customized some model portfolios for them, but otherwise we always wanted to keep the IP intact for our retail customers. And that is what we were able to achieve, even after having 30% share in the institutional or in the broking market space. There was lot of interactions that happened with the brokers, with the mutual funds. We actually spoke to top three mutual funds in the country and we showed them the performance of their products if I was running it through the IP, and the alpha was huge. If and these are the top three mutual funds in the country. If they were running around 11% CAGR, we were running around 24% CAGR with the same fund, their own fund. So there's a lot of conviction that came into us because we tested this IP not just in 2, 3, 4, 5 years since that we've been present. We've tested this IP even 10 years back, 15 years back. We've gone through the 2008 collapse. We've tested it there. We've tested it in dull markets and bear markets, and the stringency with which we do our work in terms of making sure that the drawdowns are less when the market is down or we get into a bear market, and the rebound is much faster than the market. And in the good markets, how do we run faster than the market? So there is this three phase of the testing that happens across various time frame. How your performance is in the dull markets, how your performance is in the flat markets, and how your performance is in the bull market. And we noticed that drawdowns were lesser when we went into a bear market mode. We were doing much better in the flat market mode. But when we got into a bullish market zone, our performance sometimes goes even 100% over the index performance. Result of all of that is people who've been with us for a longer period of time have seen their growth in the IP. The stopping doesn't come here because today we've reached to a point where we have 80-82% success rate, but we are not done because we personally feel that how is it that we can get some forward and futures in place so that we can make the IP further better or further predictive from here. So Marketsmojo will get into looking at the forward as well, rather than just looking at the past data, and try and see how we can make the IP better. That is on the IP front. Close to 65 to 70% of the time of myself and the whole leadership team and the whole tech team, product team goes into making sure that the IP is better. And that is something that we track on a day-to-day basis. The IP performance has to reflect not just in terms of backward testing, but also in terms of how the portfolios are doing. Each and every portfolio that we have on Marketsmojo, which is now lakhs of portfolios, we track them on every Monday to try and make sure that our customers, our investors are making money, and how many of our investors are not making money and why are they not making money. So that is the kind of rigor that we put to ensure that our customers are up there and right up there. Today, we've reached to a frame where the advisory piece on equities, be it single stock advisory, be it model portfolio advisory, be it your personal portfolios that you can upload and we can advise, is working well, I would say. Is there a chance to improving it? Absolutely. And that is the IP work that we're doing. But having said that, there is a lot of opportunities that lie where we can give you products that are way better than the market in several other areas. And we personally believe that in the next 3 to 4 years, we would try and venture into a couple of new things, which today I would like to share with you. These are possibilities, but I am aligning my thoughts with your thoughts and trying to tell you what possibilities that can emerge by being with Marketsmojo. The first possibility that may emerge is a broking integration, which means that we may have our own broking license, or we may acquire, or we may partner with somebody to make sure that your transactions are seamless. There are brokers who are, discount brokers in this country. And then there are other side brokers who are typically research-based brokers. There is nobody who's in between, which is a full service, full advisory based broking house. Both sides, the earning model, if you see in the discount brokers as well as in the conventional, broking houses, the advisory model is brokerage rates. Whether you go and talk about a brokerage rate of 20 paisa, 30 paisa, or you talk about, a per transaction, per trade kind of a model. We want to come in with the advisory model where if you are paying us advisory, you don't need to pay anything on the brokerage side. We don't want brokerage as a revenue model, but we want brokerage as a fulfillment model. So for our customers who are Mojo professional customers, they would get, whenever we launch broking, maybe in the next 6 months to a year's time, they would have the benefit of shifting into this house, into this company completely, and making sure that you don't pay a single rupee apart from whatever regulatory requirements that are there to run your transactions. Because according to me, transactions are something that have to be free in this world. Sooner or later, you will see what I'm saying, that across the industry, this trend will follow, that you can only claim your bit of earnings from a client if you are benefiting the client, and providing a transacting platform is not making sure that you are benefiting the client. It is a transactionary platform. It doesn't mean anything unless you are making sure that your advice is working, unless you're making sure that your advice works for the client, and hence, there is no need for any transaction fee. So that is one space, which is a big space that we are personally looking at. We are also a very hardcore technology and financial analysis driven firm. And so far, we've not been able to address our customers personally, which is what I used to do previously. I used to manage clients personally. And we've stayed away from that model primarily because, with the kind of scale that we have, it becomes very difficult for a team like us to put, this is not in other banks. If you go, you would have RMs talking to you, which are relationship managers, and so on and so forth. We had made Marketsmojo to ensure and to make sure that the quality of advice is right up there. The only fear that we have is that the quality of advice should not suffer when you put it through another human being, because the fundamental with which maybe a Sunil talks, or I will talk, or a Joyson will talk, or maybe our current leadership will talk, is something that we've lived for the last 6-7 years. It becomes very difficult to come with the same DNA and advise you. So we are also looking, as you guys know, we are quite close to a launch of an HNI module, where we are, for the first time, testing with a limited set of customers. We will not go all out on that product, because we are taking a mandate of personally looking at portfolios, and also personally interacting with portfolios, with the investors. So we will come in front of you. Maybe once the situation opens up, then we'll start doing meetings with you, one-on-one meetings, to understand your financial plan, what are your concerns, your portfolios, how are the portfolios doing, and not just Marketsmojo portfolio, but there, even if you need an advice on a Kotak Securities portfolio or a HDFC Securities portfolio, we should be able to give you that, because it is not the HNI product that you're buying, it's a service that you're buying, which means that you can talk to me about anything that you want, which is typically related to financial services and financial planning and wealth management, and also your portfolio with us. Now, as I said, that is a model which is very restrictive to kind of people who advise, and we are going to test it out in terms of how well it goes, and we'll make sure that that is something that comes to you in the next 1 to 2 months. We'll be restrictive in the number of customers that we can handle out there, because these are, personal modules. So that is something that Marketsmojo plans to do soon. The third big initiative for tomorrow would be the whole of the Infinite platform, which personally today we are the only company across the world that gives fundamental and technical advice and recommendation on 60% of the global market cap. InfinHub is present in 21 countries, and it's a company based out of DIFC in Dubai. We have Radhika, as you guys know, who's joined us as the head of international business, and we are trying to strengthen that whole international advisory business the same way that we are going to strengthen the Marketsmojo business. Here the opportunity may be to become a broker or buy a brokerage house or maybe tie up with somebody. But on InfinHub, we obviously will want to have a strategic alliance with somebody who can give us the global trade opportunities for our investors who would like to trade abroad. But that is a big area of focus which will be in Markets Mojo for the next 5 years. I personally believe that global investing, global model portfolios are the next things to come. I personally also believe that the world of bitcoins, the world of various other investment opportunities will move at its pace, but something which is stable, something which is tested over hundreds of years, and something which will sustain over a long period of time is the whole concept of globalization and the whole concept of participation in the globalization, which is through the listed equity space. And that is something that we would focus on. We are also a single pony company. We will, a lot of partners have come to us and said that, why don't you start insurance? Why don't you do this? We only say one thing, कि हमें जो समझता है हम वो करते हैं, जो नहीं आता है हम नहीं करते. Not that we are not educated enough or experienced enough. I have been a CEO of an insurance company to run these kind of opportunities, but we do not get into opportunities for the heck of it. We believe that there's a lot of depth that you need to acquire and to grow yourself on one principal subject. There's no point diversifying yourself out. Today, if even we are thinking of broking, it's not as broking as a business. We are thinking about broking as convenience for our customers to make sure that they have a single click on the model portfolios and on the stocks that are there. So it is more about fitting into what the client wants rather than trying to figure out various other business opportunities. We personally believe that Markets Mojo in the next 3 to 5 years will have an IPO journey. That is something that is our dream. Sooner or later, that dream has to come true, depending on how we grow and how we make sure that whatever our promises are to our investors, we fulfill those. And so that is something that we will look at. Just to give you an example, we've never raised any external money in Markets Mojo. We are a tightly held company. We don't believe in the concept of unlisted valuations the way they come in. We believe that there are only two things that sustain in a business, which is profitability and scale. Pure scale coming with delayed profitability is not something that we believe in. We personally believe that scale has to come with profitability. Even if it doesn't come in a year's time, it has to come in maximum 2 years' time. So that is something that we personally believe in, and we will keep following that principle. One of the other opportunities that may come to make sure that further our model portfolios become more acceptable to you in terms of not just the three portfolios that we run, but broader strategies as well. Because if you see in the US, we run index strategies as well. Today, we can have a Markets Mojo ETF as well. We can run Markets Mojo index strategies as well, which is, on basis on Nifty, basis on Sensex, basis on BSE 500, and so on and so forth. Now, that can either be done through a PMS route or that can be done through a mutual fund route. We are exploring even these two routes to try and see whether we need to become or launch a mutual fund for investors at wide with multiple strategies out there, and also try and see if we can club together a PMS where you can have a fulfillment with the direct POA approach so that you move forward out there. So there are multiple and multitude of opportunities that Markets Mojo is looking at, which is in the area of what we do today, which is equity and stock and portfolio recommendations uh, individually, either on Marketsmojo platform or for you guys out there on your personal portfolios. Our single line of vision is investor success. There is nothing else that we have vision for so far, because we personally believe that if we can decode the whole concept of investor success, not just in delivery, but in areas where we are a little weak on, which is, say, customer service, but in investor relations, in investor education, in making sure that we are there with you at any given point in time. That is the single point of vision that we have. We personally also feel that once you have a vision which is investor centric, rather than a lot of visions are you want to, if you see vision statements of a lot of companies, it would be, I want to be the world's number in this one, in this, and I want to create this, and I want to create that. I think our vision is typically only something that I can see through your eyes, because investor success, however you take us beyond that, you may say these are the great guys, great leadership, or maybe this is a great organization with great advisory, or maybe this is a great organization with great research, or whatever you may see. Those are the way you see us. So we want to be seen through your eyes rather than put up our own vision out there and be seen with our own eyes. Because if the investors are successful, then nothing can stop Markets Mojo from being successful. Today we have hordes of every single big institution who's looking at tying up with us in some capacity or the other. And without naming, there are three large brokerage houses who want our whole Mojo professional service, and they are ready to pay us anything. And we've said no to those deals. We've said that this is something that is reserved for the Mojo professional users. We will not and never dilute what we give to our investors. We've had discussions where people have said that, ultimately your guys are paying you 10,000 rupees a year. So, why can't we buy it in few crores? And we say that that's not something that we do, because we believe that people have been loyal with us, and we believe the real growth is in retail India. The real growth is if you can grow investor money, uh, go into the house, grow the household capital, grow the household savings. That is where the big money is, and we want to get focused there. So there is a point in time today that has come where the as I said, that the IP has matured to an extent. I'm quite confident of the IP today. I am not 100% confident, but I would be very frank with you that I am very confident with the IP, because I've seen in the last 6 years where and what kind of work that has gone in creating this. There are cross points that we've included in the whole IP, which will make sure that the IP becomes more and more conservative in bear markets, and it becomes more and more aggressive in bull markets, so that we have the concept of not just creating alpha when the market is doing good, but also saving the customer wealth, saving the investor wealth when the market is not doing very well. So these are points that we've really thought and we've kept in place whenever we've redefined our IP. And I personally believe, number one, that I'm quite comfortable today talking to you and saying that I am happy with the growth of the IP, and we will keep working on that. So that's our number one promise to you today moving forward. Number two is the product opportunities, whether it is HNI, whether it is technical product. These are opportunities that will keep coming in, and we will keep working on those. I have repeatedly said only one thing, is that we will only launch these products once we have our 10 clicks on it, which basically means that once we put our stamp on it, it has to make sure that it follows a simple concept of, can we maximize investor wealth by minimizing the risk? It's a tough ask, but we would not launch anything till the time we reach there. even if it takes us months and years, we will only launch things when we feel that we are most comfortable now to going in front of our investors and saying that we are putting our personal stamp on this and you can start investing in this. But these products and services will keep coming in. The third point is the big initiatives where we will look at transaction enablement on the site, which is either, as I said, being a broking house, or whether tying up with a broking house, or whether tying up with multiple broking houses, whatever. But we want transaction enablement on Marketsmojo in a way that you do not pay anything for those transactions. Again, I will not tie up with anybody if that becomes a revenue model for somebody else. I am not here to to make somebody else healthy and make my own clients unhealthy. That is not something that I will do. So we will never do a referral tie-up. We will not say that, okay, you take this client and you start doing whatever activities that you want to do. Our discussions have been very straightforward whenever we look at strategic partnership as well, that we will look at only places where we can reduce the transaction cost of our investors to zero, and they are only looking at advice. And if the advice works, they pay us, they be with us. If they don't like our advice, they are free to move out at any given point in time. So that's our third thing. Fourth, obviously, is the whole HNI approach that we are taking, whether it is through a PMS route, whether it is through just the HNI route, or whether at a given point in time it is through launching a asset management company or a mutual fund company. Only time will decide how we'll move forward towards that approach. And the growth that we are looking at in terms of attaching with you is to make sure that you guys have surprised us completely in the trust that you've shown us. And I must thank you for that, because a lot of you guys, when you renew your extensions for 5 years, 10 years, 15 years, 20 years, it scares me sometimes, because the kind of trust that you've given us is absolutely overwhelming. That you guys have committed yourself to us. And I'm not talking about amount. Some of you investors may be able to spend 1 lakh, 2 lakh easily because you're getting a 20-year advice out there. It is not the amount. It is just the concept that you are locking in an advisor for 20 years or 10 years or 15 years. And I think that gives us the confidence of moving ahead. So today, on this auspicious day, I would give the full credit to only you guys. We've really slogged out over the last 6 years, but I think our success is only contributed by the trust and the confidence that you guys have shown us to move forward and to make sure that you want to participate in this organization. We will always be an investor driven company, and we will keep making sure that our investors are right out there, and everything that we do is in the investor interest. And that is something we will never compromise, because we've seen enough of the industry and we know how the industry can work. We have a specific way of working, which is typically making sure that this company is ideally run by investors, owned by investors. It is something that the investors have made. So with that approach, our next 5 years would be towards the making sure that you have fulfillment on Marketsmojo, making sure that you have other products on Marketsmojo, and making sure that you have other services on Marketsmojo. We will, as I committed to you, that we will not get into anything till the time we are absolutely certain about it. But we'll make sure that we'll keep growing very fast. We are a set of, I would say, middle-aged people, but I can tell you that we have pace that not even a 26-year-old can come and beat us on. We are people who run very fast. We are very agile as an organization. I'm proud of the leadership team. We have had zero attrition. There's not a single leader in our company that has ever quit. So we have zero attrition. We have the same team in leadership which we had. We've added people, But the first set of team that we had 6 years back is exactly the same team that we have today. We've added more people, but that is the principle. And now, even if you talk to a Karan or Sunil or me or Joy or anybody in the leadership team, you will see the same talk that will come ahead, because these are the guys who made Markets Mojo, and these are the guys who believed in that particular vision to make Markets Mojo. So uh, that is where we stand today, and that is our story for the next 5 years. As I said, today is a very auspicious day, and I would like to thank you all for being a part of this journey. I would open up the dais for any questions that you have, and we will continue with our Q&A session. But I thought it is a good time for me to come in today and talk to you without any agenda, and make sure that we are aligned in a thought process, and you guys know where Markets Mojo is headed and where your relationship with Markets Mojo will go on from here.
Okay.
This is,
Yeah. I'll just start off with the question answer. This one question by Mr. Ram. He's saying, what's the size of your team doing research on stocks or portfolios?
So the size, there is zero size of the team which does research. Uh, there is everything that we do on our research is typically done through the system. We don't have an analyst team in place. We don't, the conventional head of research analyst. We don't have a single person. We are analysis team which has put all the knowledge into the system. The system reflects back on a day-to-day basis if our algos, if our IAs are working or not working, and we reflect back onto the system and try and tweak it. So we are more like data scientists rather than an analyst team. So to answer your question, frankly, apart from Sunil, Joyce, and me, apart from Karan, apart from maybe a couple of other people, and very senior external support that we keep seeking, we don't have any analyst in the team at all.
Okay. This next question, this is one by Mr. Mahindra from the YouTube chat. Whether Markets Mojo would be a standalone entity in the next 2-3 years, or may get merged into other listed brokerage firm or finance companies. Is there anything else down the line?
No, Markets Mojo will be a standalone entity. We don't want to merge with anybody. We don't have. I think the philosophy gets merged when you get merged with somebody. So Markets Mojo will always remain the company that will take its financial decisions. So there is no plan of selling off Markets Mojo. There is no plan of merging it. We want to run it till the time we want to run it, which is till the end of our careers. So we don't have any plans on that.
Okay. Question by Mr. Dipankar. Once if Markets Mojo becomes a broker or strategically ties up with a broker, will the model portfolio work only through that channel, or will it continue to provide deal sheets which can be used by other brokers as well?
Yeah, no, we'll keep doing, as I said, there is no compulsion for you to come and do your transactions with us. We understand if you have other brokers through which you're doing transactions, so you will keep getting your deal sheets. You will have an option of transacting with any broker of your choice, and you will have a convenience here that you can transact on Markets Mojo, or you can choose any broker that you want to deal with. So there is, as I said, for me, giving you transaction enablement is not a business. It is giving you convenience. And if you're getting convenience from somebody else, you can keep doing your business with somebody else.
Okay, a question by Rajesh. He wants to know if predictive analysis will be added onto Markets Mojo platform. Any rough idea on that?
Yeah, we are looking at what kind of predictive analysis we can add. It's one area that may make the IP better, but it also may hamper the IP. This whole predictive analysis is basically predictive, right? So today, the reason for our high success rate is because whatever we do is declared data, and we look at the data that is already out, and then we analyze that data. Predicting the data is where a lot of people can go right and a lot of people can go wrong. So that is something that is a very risky area. But there are certain parameters that we can adopt in our current IP, and those are the parameters that we look at. But I can also tell you with certainty that Marketsmojo will not become suddenly a predicting company. That will never happen. So we will just take macro parameters coming in and try and see that where the macros can move forward and do some bit of predictive out there, which is also something, as I said, that we'll only implement if we feel that it is adding and taking our success rates higher. But it will not become a wholesale, predictive analysis company.
Okay, Mohit, there's a lot of requests of investors asking for the previous links. They've not been able to extend it further or take a subscription. So they wanted to know if the previous links would be available.
Yeah, we had increased the prices day before yesterday, if you know. I think it is 13,999 for 1 year and 24,999 for 2 years. The offer that was running before that was 19,999 for 2 years plus 3 months, and our famous offer that we stopped for you guys, which was 49,999 for 5 years plus 6 months. So Jason, what I request you to do is put up the old links today, just for today, and make sure that we close it at midnight again. But just for the next 3-4 hours, because of the day that we are sitting on today, we will activate those two. So Jason, if you've not activated, just activate those two offers and put it out. So guys, whatever you want to do it, because these are the old links we'll provide you. If you want to finish your transactions and you've missed out, please do that. You will realize by the morning that the prices have again, we will change the links again. So if you want to renew or extend at the 19,999 with 3 months free for 2 years, or 49,999 with 6 months free for 5 years, we'll provide you that for a few hours today.
Okay, I'll just ask the team to keep the links ready. I'll pick this next question till then. Mr. Gosar wants to know if Marketsmojo would ever come up with score based on options and futures.
Absolutely, yes. There is a possibility that we will. Yes, we are looking at that as we are talking right now.
Okay. Moving on to the next question, I think you had spoken about merging personal portfolios to model portfolios. Mr. O.P. Agarwal actually wants to know whether that's going to be down the line.
Yeah, Mr. Agarwal, that is not very far off. I would say that we are currently only, we are a team of 30 people, right? And we are hiring multitude of people. In fact, we are open to hiring any number of people today. But what we are doing in terms of merging your personal portfolios into model portfolios, or giving you the ability to shift from model portfolio to model portfolio, is something that we should be able to launch in the next 30 to 40 days at maximum. Currently, our energies are all focused on coming out with the HNI product. And that is something that looks visible in the next 3 to 4 weeks that we'll come out with. Sorry, yeah. Jason, give the old link of InfinHub as well today, since we are giving the... So 399 with 100 days free. In case you guys miss subscribing to InfinHub, please make sure that you subscribe multiple times. Otherwise, again, we'll not be able to do that. So today is Ganesh Chaturthi, so we are giving you the old links again. So make sure that you buy and holds and keep it if you've not already done that.
Yeah, I'll just drop all the links in the chat box. Yeah. Moving on, this one question we've got. This is by Mr. Amit Srivastava. He's saying you guys don't believe in buy and hold, whereas a lot of great investors have created wealth by buy and hold over a long periods of time. Why is that so?
No, it's not that we don't believe in high buy and hold. We personally believe that the buy and hold used to work at a certain time. It is not working right now. That is what we believe in. There is a time for every strategy. We personally feel that with the current set of growth and the neo growth and the innovation and the disruption that is coming out, and the competition, the cross border opening up, the raw material rates changing, the duties changing, the import export taxes changing, with the currency changing so fast, there is a lot of things that move way faster. It is no longer a monopolistic kind of a market where you are a business leader for a long period of time. Somebody can come overnight and disrupt your business model. And we've taken numerous examples of buy and hold over the last, say, maybe 5 to 10 years. And we feel that basis the data, it's not that we have a view. I'm saying that if you have a simple data output that we've shown you in buy and hold strategy, it doesn't seem to be working at this stage. Not to say that buy and hold is not something that you should follow if you want to follow. It is a great thing. But I think if you include your buy and hold and you look at, what we used to do maybe 15, 20 years back, that you have Infosys in your portfolio, so you have Infosys, you have HDFC Bank, so you have HDFC Bank in your portfolio. There are things that you can still do. But those are things that may marginalize your return. It may not give you the kind of returns that you were getting previously, because markets have opened up. There are a huge set of companies that have come in. There's a price disadvantage that is happening. The whole space is opening up and moving very fast. If you are doing a buy and hold strategy, I would say keep it with an active mind, keep it with a review mind. That is all that we say. We are not convinced that buy and hold strategy would work the same way that it used to work. I mean, there was a time, if you guys remember, I took a place in Bombay. I'm talking year 2003, right? Year 2009. A year 2010, actually, I sold that place for 13x of my investment, right? Today, that place is exactly the same price. So and a lot of our fancies go towards our past experiences, right? So when you go towards even real estate investing, for that matter, or when you go towards, that this particular stock has created wealth for me because I held it or my father held it over a period of time, we are just saying that things are changing very fast and you need to be very careful. Merge your buy and hold strategy by actively monitoring those stocks. And even if you see the whole market scenario, in which the way your market cap sometimes move, your sectors move, and your company's growth cycles are coming into play, there's a lot that is happening that is going to drive people out of business, new businesses to come in, market share loss, market share gain. Those things are now, it's not a monopolistic market anymore, where you have four players and the four players are like 90% of the market, right? So be very careful out there is what we feel.
Okay. I'll pick the next question. This one is by Darshan. As Sunil ji says, the first one in the market may not be the best one. They have gone out of competition also, like BlackBerry, Nokia, etc. Where do you see the competition and how can you sustain here?
Unfortunately, we are not the first one in the market. There was a site by the name of Equity Master when I was doing money control, and I'm talking 98. They were doing equity research. There is a site in the US by the name of fool.com, motleyfool.com. They have been doing research for the last 25, 30 years. So we are not the first ones in the market. The way that we are doing research, we are the first ones in the market. The way that we do research, which is whole encompassing, I don't have a 75 people research team. And there is a reason I don't have it, because I manage these research teams. So it's not that I've come out with a business model without having the experience of doing so. See, what happens is that if you have an analyst, right, and I've explained you this concept before, but let me just tell you how this industry works, right? So if you have an analyst typically would look at 2 or 3 sectors in his lifetime. वो टेलीकॉम देखेगा, वो आईटी देखेगा, तो वो हो गया खत्म. He is a IT analyst and a telecom analyst, right? Now, when he becomes a IT and a telecom analyst, the maximum capacity that an analyst has got to track companies is around 25 to 30. So 25 से 30 companies in 1 or 2 sectors is what an analyst starts at the age of 25 and retires at the age of 60. That is what an analyst does, right? Similarly, you will have sector-specific analysts who will track certain companies, and maximum what will happen is that if he gets bored, he's done 2 sectors, he will add a 3rd sector to his portfolio. So let's assume in this case he added banking to it, so that he becomes a 3-sector guy. उससे ऊपर मैंने आज तक नहीं देखा किसी को. I have never seen handle more than 2 or 3 sectors at maximum, because and he becomes a sector expert. Now, when he becomes a sector expert, what happens is that you are not going to get a salary if you're an analyst by giving a sell call. Let's assume that all these 3 sectors are out of vein, right? The analyst will still give a buy call because he is not just biased, but he personally sees only those three sectors. And he unfortunately gets paid to only give a buy call, because उसका buy call पे ही कोई transact करता है तो उसको company को पैसा मिलता है और उसको salary मिलता है. So it is when you have something that is so closely related for you to give a transactional call by the knowledge that you have, rather than say that today I don't have a transactional call. So the objective, why we don't have these 75, 80 analysts and all this stuff, because first, we didn't want sector biases to come in. Secondly, we didn't want human limitations to come in, that only 25, so that guy will give. And thirdly, we disintegrated ourselves from the whole transaction model, so that there is no compensation only. Today, if I don't have a single strong buy, I don't have a single strong buy. If I don't have a single Mojo stock, let's assume at a certain point in time, I don't have. So it is not that you are paying me basis a strong buy call or a buy call or a this thing, right? So we have basically removed the biases and made the model, which is something that a human mind at a naked level cannot do sitting out there, because you have like billions of data points that are changing on a day-to-day basis, right? So we get all of that to try and be analyzed by the machine. We remove the human bias and we remove the transactional bias. The reason today I'm also telling you that we don't want to earn anything out of broking is primarily because वो transaction bias चाहिए ही नहीं हमको, चाहिए ही नहीं कि अगर मैं क्लाइंट को 10 बार घुमाऊंगा तो मैं इतना पैसा बनाऊंगा, या वो पर ट्रेड पे मैं इतना पैसा बनाऊंगा, वो नहीं चाहिए. We don't want that transaction bias. The only way you can remove a transaction bias is by becoming a zero, right? Not by saying that I am zero, but I'm charging something here and something there and all of that stuff. So there is you have to have a zero approach if you are following an advisory approach, to say that you're paying me for advice. No, that's all. You don't need to go anywhere. Same model on mutual funds, right? When we'll get into mutual fund transactions, we will do direct model out there, where we don't get anything from the mutual funds, because you're paying me, no? Why do I need to get anything from the mutual fund? So even there also, we will save 1% for you guys. So see, that is the whole approach, because it is not humanly possible to run the kind of analysis that we run. So these companies have been there, they're still there. But we've come in like 6 years time, and we are today bigger than the whole industry on the advisory side. There is always a risk of a fallout. There's always a risk of a fallout, right? The only way to stop that fallout is that you're monitoring yourself rather than flying high. You're monitoring that, why am I going wrong, rather than flying high. We are not a bunch of 28 years old who are trying to run a business. We've done this for 30 years, sir. So we know where we can go wrong, where the IP can go wrong, where we need to come out and work on the IP again. So there is, and see, Marketsmojo, to just give you an example, you see a lot of ads on Marketsmojo of subscription, right? You see a lot of ads on Marketsmojo for subscription. Have you seen a single ad on Marketsmojo of anybody else? If you go to Money Control, you'll see 200 ads. Have you seen a single ad of anybody else on Marketsmojo? We don't promote anybody. That's not our revenue model. We let nobody can advertise on Marketsmojo. You know this? Nobody can advertise. Hamara revenue model nahi hai wo. What is our revenue model? You guys. So we've also made ourselves very singular in our approach. That if this doesn't work, then I'm out of business. Rather than trying to do too many things, this is the only thing that I do. So that is the reason that today I can earn, frankly, in between you and me, I can earn 5 to 10 lakh rupees a day just by putting somebody's ad out there. We don't do it. आप वैसे भी देखें तो 20 से 25 करोड़ I can earn just by following money control model and putting ads everywhere. We don't do it. We only give our offers out there. There's not a single guy that you will see on Marketsmojo in the last 6 years since the time we launched who advertises, or we do not accept advertising on Marketsmojo. This is our model.
Okay. I'll pick this one question. This is by Mr. Hasib Badr. Does Marketsmojo visualize in converting a Mojo professional user into a super investor like Damani sir or RJ sir? If yes, then is model portfolio approach capable enough to give such a result?
Yes, model portfolio approach is very capable enough to creating that approach. Even if you look at the largest investors and you look at Damani sir, you look at RJ sir, you look at all their CAGR returns and across their this thing, the CAGR returns today that you're getting from Marketsmojo, which is around 45, 47%, maybe at par with what these investors have generated. But they've been in the investing market for 25, 30 years. The difference is not the returns that they generated. The difference is that they've been there. They have always put majority of their wealth in the markets and they've stayed patient. If you have those personal traits, trust me, you will, in your capacity of, I don't know how much wealth you would invest, but in your capacity you will become that. So there is no way that you can't, if you have the discipline and the patience to stay invested. If you're basically saying that my asset allocation has to move towards largely equity, and whenever I have funds I will invest, so that if you follow those principles, there is no way that you can't not become that. So absolutely you can.
Okay. And we're getting a lot of questions from the YouTube chat regarding this. I think I've picked this concept a lot before. This is by Mr. Salil. He's saying currently is a correction due since we've seen unreal rallies for the past couple of months.
Yeah, so see, I don't know. Frankly, as I said that, 99 out of 100 people will say correction is due. Because वो fear of height तो सबको आता है. And I will also say the same, हाँ ठीक है, correction तो आना चाहिए. अभी थोड़ा बहुत तो fundamental correction आना चाहिए. I personally believe that there is a lot of froth in the market. There's a lot of trading froth in the market. That trading froth is driving some bit of counters out there. I was again with somebody and I was driving with somebody and that guy was saying, I invested in this, Mohit, this became this and this became this. And I was checking on Marketsmojo, some unknown companies, and they were all strong sell companies and all. So when I look at that discussion, I know that ye froth aa gaya abhi market. When people are going towards this kind of phenomena of trying to just run after penny stocks or just trying and saying that boss ye to daily ka agar 40 paisa बढ़ रहा है market तो मतलब अपने को तो we have to participate, then that froth has come. So that according to me, froth will go away. Trust me, I am not very scared on the fundamentals. Yeah, we have higher valuations, but if you ask me the fundamentals of companies, are you scared about that? I am not. But the sentiment of what the retail segment can do, it is a herd sentiment. 2 दिन नीचे आएगा सब प्रॉफिट बुकिंग पे आ जाते हैं, 2 दिन ऊपर जाता है सब खरीदने पे आ जाते हैं, तो वो सब चलेगा. Markets will be hugely volatile. So my personal thing is that it is not a bust bear situation that is coming. I think it will be a lot of volatility that will be in the market because there's अभी जैसे आप बोल रहे हैं, every single investor is thinking the same thing कि अगर 2% नीचे आया तो निकल जाऊंगा, I will hold. अगर 2% ऊपर गया तो फिर मैं आ जाऊंगा. So that volatility will drive the market in the next 3-6 months. And I think there is a lot of trading froth, which over a period of time, I think it requires a little bit of fundamental correction for the market to come back to a little sanity. But I don't think so that there is a situation of a fundamental bust coming in or a bear market approaching, and that is something that I really don't see. Even if you ask my personal opinion, I would say that I don't see that at all.
There is one question by Sam. We've got similar question on social media handles as well. If model portfolio will create another RJ or RD type of investor, what's the reason of Joy and you decided to monetize the IP? You could have simply invested and be another RJ and RD as well.
Absolutely, and I think that we might become bigger than that by being in this company. So you can, अगर आपको दो चीज एक साथ हो जाता है, because none of these guys have a listed company of their own, right? We are not investors. We are not sitting there to create an IP and then invest our own money. I'm saying that if today you can run a successful business by being equally or bigger or smaller than them, then we want to take that route. So the 5-year, 10-year end kiste dekha hai sir. We'll see where we reach. We are business creators. Everybody has their specialty. Some people are investors. Some people are only investors, and some people create wealth by creating businesses. So we are people who believe that we can create wealth. The best way we know how to create wealth is by creating successful businesses and then monetizing on those businesses or becoming bigger than anybody else in the market after creating a successful business. You have, guys like Motilal Oswal. You have maybe, I don't know what's their market cap right now, but they hold 30% stake in a company with a 15-20,000 crore market cap. But people don't talk about them. Why people don't talk about them? Because it's a listed company. But if you see their share wealth, that itself is, almost $1 billion or maybe more than that in various companies that they have. So I think it's a way of creating wealth, and everybody knows how the best they can create. We are product creators. We believe that our strength is creating products.
Okay, and I've dropped the links. A lot of you all have requested this 2 and 5 year link. I've dropped them in the chat box. This one question by Mr. Kuntal. Hi Mohit, one thing I want to say so far is that there's a hole in the system which is working purely based on computer-driven statistics, but our Indian market is sometimes drastically affected by human emotions. Is there any intelligence you have for this in the system?
No, I think, see, this is not a computer-based analysis model versus uh, you know versus the human emotion side. There's a complex situation out here. The situation that we are dealing with is that today, what am I doing? Brass text kya hai? What is it that Marketsmojo does? We're doing fundamental analysis. We're doing fundamental analysis on all 4,000 companies, and we do the fastest, right? Our belief is what? And if you see smartly, what have we done? Smartly, what we have done, we've said that fundamentally, if you're there in good companies, sooner or later, you will be right. Right? And then we use technical as an overlay for an entry exit. Simple. So now, fundamental, if you were to look at fundamental data points, वो एक analyst भी उतने capture करता है, मैं भी उतने capture करता हूँ, लेकिन वो change नहीं कर पाता है. He is not able to create a dynamic model and change that, because he works on 20 formulas, I work on 550 formulas, and I know that वो cross हो सकता है formula. This may not mean this, but this may mean this, and all this stuff. So why I frankly see lesser risk in our model is that the day I start doing quant modeling, I don't do any quants. I do zero quants. We don't do any quantitative modeling and all of this stuff. हम कुछ नहीं करते हैं. We don't do any futuristic target pricing basis. ये इसका shoulder यहाँ आ गया और इसका head यहाँ बन रहा है on technical graphs. We don't do any of that, because that is something that is unforeseen, right? The markets can define and overnight change it. What are we trying to do? We're basically fundamental investors. We do fundamental investing by creating a capability that a human can't create, by making sure that we are 100 million times faster than a human. And we've removed all the biases. So this is the approach that Marketsmojo comes with. So the conviction with which I say that, boss, follow our advice is why. The conviction is only one simple reason. That fundamental तो गलत होता ही नहीं है ना. कब हुआ है fundamental गलत? अगर आप आज buy and hold बोल रहे हैं, if you are talking about even buy and hold, आपने Infosys खरीदा है 15 years back, it is because Infosys has fundamentally grown ना. You will buy HDFC. Why? Because वो 15-20%, 25% का growth देता है ना साल भर साल. So fundamentally, even if the company gets beaten down for 3 months, 6 months, it'll come back again. And what we do is we only do fundamentals. And technical, as I said, is an overlay for us to enter and exit and decide where the market is going. So this approach, according to me, is a very sound approach, right? Because we are not trying to malign our approach by looking at technical quant modeling and all of this. So नहीं करेंगे हम लोग, और वो कभी होगा भी नहीं. Even the technical product that we come out with, the technical product that we are working out with today is purely on fundamentals. If we come out with an F&O product, it will only be on purely fundamentals, so that we minimize the risk out there. So that is the difference in this company versus any other company who's purely doing this kind of work.
Okay. A question from the YouTube chat by Mr. Satyajit. Does Marketsmojo wish to become a mutual fund in the future?
The answer is maybe yes, we may become, and we may launch multiple strategies on the MF platform. So the answer is definitely a possibility, yes.
Okay, also question by Rakesh is that, Mohit sir, are you not afraid of the system being hacked?
No, I'm afraid. And we are following enough, we are following enough protections to make sure that it doesn't get that. We have our own ways in which obviously I can't on an open forum disclose out there. But there's always a possibility. I think the way technology field is going and the way people are, doing things, and especially when I see some Netflix, episodes on or series on how where the internet is going, it scares me. So there is always a possibility, but that's always a risk that you run when you're on this. I mean, the biggest of the online brokers run that risk. We are actually not in the business of managing actual money. The risk is much bigger for banks. The risk is much bigger for brokers because they're actually holding money on that platform, which we are not doing today.
One question by Mr. Sanjay. I'm an armed force personnel, soon having a voluntary retirement soon. 45 years old. The dues which I receive as pension benefits, is it advisable to invest a part in the model portfolio for the next 5 years? Amount being 20 lakhs. I already have a personal portfolio of Mojo stocks presently.
Yes, I think you should do that. Always follow the model portfolio approach. I have repeatedly said that you may flip or slip a little bit on your philosophy when you are looking at your personal portfolio, even if it is a Mojo stock portfolio. I would highly recommend that you have a model portfolio. I would highly recommend that you at least 50 to 60% of your equity surplus should be in model portfolio, and the remaining should be on the other side. Provided you are an absolute expert, then you may not want to have a model portfolio approach and make your own approach. But otherwise, I would highly recommend that you have a model portfolio approach.
Okay. Let's move forward. There is one question by Mr. Chintamani. A lot of investors actually asked this today: is that are you guys hiring? What kind of skills you typically need in Marketsmojo?
We are hiring customer service, as you know, is our pain area. So we are hiring. We are already hiring a lot of customer service people. We are hiring a lot of coders, both front end and back end. We are hiring some analysts to support us further on these webinars, so that we can get much deeper into analysis and produce something better for you guys. We are hiring people on the marketing side as well, so that we start talking about better interface. We are looking at a lot of UI UX changes on the site. We are looking at redesigning the app. So there is a lot of work that is going on parallelly as we talk today.
Okay, and also we've got some few questions on quarterly results. This one by Rajesh Arora is that what's the time delay it takes for a quarterly results to be analyzed on Marketsmojo after the exchange has declared?
So see, once the exchange declares the quarterly results, it depends on when they send it to us. So there is typically, I would say, half an hour, and we track this very closely because we've told them that at least BSE 500, the top 500 companies result, they need to send it within 15 to 20 minutes. So if it comes to us within 15 to 20 minutes, if the file comes to me the minute, or rather the second the file comes to me, it's updated on the site. It's real time. The only delay is from the data provider when the file comes, right? On the system, as soon as it hits my database, the analysis, the rating, the score, everything changes. So that is a second's job. But for us to sometimes get the data from the exchange or the data providers, it can take from half an hour to maybe sometimes smaller companies, it can take 2-3 hours. So as soon as that comes in, it goes into the system.
Okay. Moving forward, is this one question come by Kuldeep? He has a question on allocation. What should be the asset allocation for model portfolio versus mutual funds? Do you have any opinion?
No, I think model portfolio versus mutual fund asset allocation, I would say that you need to look at your overall asset allocation and then define what kind of model portfolio you want, and then decide what kind of mutual funds you want. So for example, if I am today an aggressive customer or a conservative customer, let's take the example of an aggressive customer. Now, if I'm an aggressive customer, I would typically look at a model portfolio which is aggressive, and I would look at a mutual fund which is a cap agnostic fund, which can invest in large, mid, and small caps together, rather than a large cap fund or a mid cap and a small cap fund separately. So that is how you need to look at your allocations down. So you need to start with where you are and then plan the instruments. Mutual fund is an instrument of an outcome of your asset allocation. Model portfolio is an outcome of your asset allocation. It is not the other way around. It doesn't define you, you define them, right? So if you today say that I am an aggressive, like for example, my profile is I'm an aggressive investor. As far as investing is concerned, I feel that I'm an aggressive investor. Now, in that case, I will always take an aggressive portfolio and I will stand to it and I will keep allocating on that aggressive portfolio for the next 10 years. Because I know that for me to generate exponential wealth, if I have to generate and go in excess of 30-40%, I need to take an aggressive approach. But I have the discipline and the patience of making sure that I don't get drowned by market down and all of that stuff. I find opportunities in investing more during those times. So that is because my risk profile is aggressive, right? So, but if your risk profile is conservative, then you should allocate onto the conservative model portfolio and you should follow the route of large cap only towards your mutual funds as well. So it really depends on where you are.
A question by Mr. Frank. Hi, Mohit. I have large funds on hands due
Yes.
to a sale of property. Should I invest in the US market or in the Indian market, which would give me better returns? The risk is exchange rates and devaluation of rupees, and the funds are in dollars currently.
Yeah. So Frank, I have my personal view on this, but I'll be able to give you system views very shortly on this. I know that you are one of the most religious guys who attends most of the webinars. So I would say give me a little more time on this because our system views are getting collated along with the Indian portfolio. There is no, my personal answer, if you were to look at, and I'm not talking, please don't take this answer as the system answer. But I would say that if I were to look at today in between US and India, I would say, typically I would look at 50 to 60% US and 40 to 50% kind of an Indian portfolio mix. But as I said, don't take it on my word. Let's wait for what Marketsmojo and Infinop systems today can tell you.
And also, there's a question on the YouTube chat by Vaishali. Said, does Marketsmojo sell user data to other third-party providers?
Sorry?
Does Marketsmojo sell user data to other third-party providers?
Not at all. Not at all. Not, guys. I don't advertise on the site. My database is locked. Nobody in the world can have access to my database. That is my personal IP, and that is the most confidential thing of our investors that we have. We have zero sharing. Have you ever got a single promo mail of anybody else from my database? We don't advertise anybody. We don't promote anybody. We only promote ourselves. So that you may get 5 mails a day, but you will not get a single mail from anywhere else. There is your data with us is 200% assured. It is my personal mark on it. So please don't worry about that at all.
Okay, and there's this one question come by Piyush. He's saying, why only 10 stocks and 10% allocation? Why don't you follow a 5 to 7% allocation and more number of stocks?
You can do that. You can take the conservative approach. In a conservative approach, I think we have 7% around 15 to 20 odd stocks. You can do that. We typically believe here in a maximum 20 stock portfolio. You take a 5 stock approach, you're typically talking about 20 odd stocks. So that is not very far off from where we are today. Yes, we don't believe in taking 25, 30, 40 stocks because I think that we are a firm believer in diversification and quality diversification, not just about over diversification. We personally believe that anything over 15, 20 stocks moves towards a concept of over diversification. And we don't run that on our site. We believe in concentration and managing concentration with full dedication and only fundamental quality.
Okay, a question by Mr. Devian Rao. He wants to know when would Infinub launch the personal portfolio upload feature?
The Infinub personal portfolio approach feature will come in soon. I think in the next 2 months, that is a tracker approach and the analysis approach that will come in across all the listed markets that we have out there. We are also adding the model portfolios of remaining countries as we had promised you. So I think in the next 45 days to 60 days is when you should see that.
And also, a lot of investors have asked the minimum ticket size for the HNI service.
Frankly, there are two models that we're looking at. There is one model where we have a minimum ticket size. The other model is where we don't have a minimum ticket size. Uh, just give me another week's time and I will disclose both the models to you. So in a couple of weeks. But as I said that that service will not be, it will be a limited service because, we don't have the bandwidth of meeting many customers. So we will make sure that we are taking customers who, for me, the only definition is it's not a question of what money you have, although money may be a definition out there, but it's a question of what kind of patience and what kind of understanding of markets you have, because we want to align people who really feel that they are disciplined and they can take long-term approach rather than 2% down and I will get a mail my portfolio is 2% down. So we may, in those kind of scenarios, say that please manage your money yourself through the model portfolio approach rather than, because see, the thing is, I have been with disciplined investors. I've been personally a disciplined investor where I can tell you that we need to look at investors, rather choose investors where we feel that these investors can take the risk return paradigm of the product that we're talking out there. So that is the only difference. But give me a week's time and we will, surely come back out there. My only request to all of you here is today is an auspicious day. I've opened up this offer again without asking anybody to you. If you guys have not, and this is offer will close down on midnight. If you guys have not renewed it, or if you guys have renewed it less, you know that 24,000 I'm offering you in 19,999 for 2 years plus 3 months free, right? Which is 24,999 for 2 years. So there's a huge, suddenly I've given you a huge benefit out there. Even a 5-year offer, which has been cancelled from the site, we don't offer that at all, is available with a 6-month free. Please make sure that you benefit it. Otherwise, you will be looking at the links tomorrow. This offer will close it after this particular webinar. So it's available on this webinar. So make sure that you extend it. Sorry, Jason.
Yeah, going on. Question by Vinod is that, Mohit, do you also follow the model portfolio approach completely?
I only follow the model portfolio approach. As a promoter of this company, I don't invest in single stocks. Both me and Joyson, as founders of this company, have bound ourselves under insider trading policy of SEBI. Insider trading policy, SEBI gives us the permission to get into a stock after a week or 2 weeks, a notional period after we announce it to the investors. But we took a call that we don't even want to buy after a week or 2 weeks. So we invest all our money through our model portfolios. The same second that your advice goes, the advice for me comes out there. So we have taken a fundamental call to stay out of any regulation that may impact the long-term benefit of Marketsmojo. So I only follow the model portfolio approach. 100% of my personal wealth is only in Marketsmojo's model portfolios.
Mr. Mohit, that's with the Q&A session.
All right. Thank you so much, guys. And again, wish you all a very happy Ganesh Chaturthi to all of you guys. And we'll hope to see you again tomorrow soon. Make sure that these offers will close down after this webinar. So make sure that you guys renew this and, otherwise go back to the same pricing that we have now new on the site. You have a big benefit out here, almost a 30% benefit more than you're getting. So make sure that you guys renew it if you feel like. With that, thank you so much. And thanks a lot for attending this webinar on a holiday, and hope, you guys see our alignment with you. Thank you.
Yeah, and a lot of you have been asking me to send the links by email. I'll also be sending an email so you can check your inbox for that. And another link for upcoming webinars. We have a 11 a.m. Paid Mojo professional member only tomorrow at, and our CIO, Mr. Sunil Lamania, will be talking about the latest stocks that have entered. So looking forward to seeing you all come for that. If you're an unpaid subscriber, you can subscribe and get an overview of all the new